welcome. You're watching the IPO show. We have with us a special guest who joins us and who's been tracking the primary markets for decades now. Astha Jain, Senior Research Analyst of Securities, joins in. Astha, you've obviously had it extremely busy all of 2024. It's the time and the season of listings. I'm going to start with Orient Tech. This one, of course, listed on the exchanges today, was subscribed 152 times, got a debut with a 46% gap up. Now, over to you for questions. What does an existing investor who managed to get lucky and get subscribed to Orient Tech do? Should they take some profits off the table today? B, if they weren't lucky enough to get an allocation to Orient Tech, should they consider buying it today?
Hi, good morning, Samina. First of all, yes, a very busy month, very busy week. And from last 2 years, we are seeing this trend that usually August and September are usually very hot months for the IPO, and the number of the IPOs are quite high in these 2 months. So yes, now talking about Orient Technologies, first of all, we have already recommended subscribe for this IPO, and we really congratulate to all the allottees, who got this allotment. So what should they do? I think they should book partial profit, because now when the IPO came, it was at the price to earning multiple of somewhere at around 20-21. But now at this high price, because now we are seeing that it is already quoting at 44-45% premium. So I think the valuations have become a little more expensive, and we are not seeing a much upside from here. Maybe one can see the upside of around 10-15% more from here. But now the upside, there is not more upside left from here. And that's why we are recommending to book partial profit if anyone has got the allotment in this IPO. But for those who have not received any sort of allotment, please don't be in a hurry to enter into this IPO. The company is already quoting it a high PE multiple of more than, I think, around 25 at this price of around 302 or 303 at which it is quoting right now. So just wait for some dip to come and then make entry into the stock, because the upside is now limited from here. So from the risk reward basis, I think it is not advisable to put money currently at the price of around 303, 304 at which it is quoting right now. Just wait for some dip, let the price fall to the level of around 280 odd levels, and then make entry into the stock. So those who have got the allotment, they can book partial profit. But those who want to make a new entry, as they were unlucky at the time of allotment, they should wait for some fall and then make an entry into the stock. This is what our recommendation is for Orient Technologies at present moment of time.
Take your profits off the table. Don't get caught. It's a great debut, but of course, wait it out, because it does look expensive, especially after the sort of run-up the stock has seen on listing day. Well, one on top, of course, on top of our minds is Premier Energies. Premier Energies is the largest solar cell exporter to the US market in FY 2024. Ahead of its IPO, Premier Energies mobilized 646 crores through anchor investors, which included the names like Nomura, BlackRock, PGGM, Government Pension Fund Global, Abu Dhabi Investment Authority, Morgan Stanley, to name a few. How does this one look? I think there's a consensus aggressive buy call on Premier Energies. Would you agree, Astha? Because even the numbers were phenomenal, and with the government's commitment to green energy, this cannot be missed, I would imagine. And of course, there's marquee clientele as well.
Yes, you are absolutely right, because the kind of concept it is into, that is into the solar cell manufacturing as well as solar module manufacturing. So I think the kind of business they are into, it is really very hot, and the government's support is totally there with this sort of business. Along with that, what a financial performance they have shown. I mean, a strong CAGR growth both in the top line, bottom line. In fact, a marquee set of clients they have, and the order book is also on the higher side. So looking after all this, the valuation has now become a prime focus of any IPO, and the valuations are also reasonable because they are coming at somewhere at around price to earning multiple of 27. This is, I'm considering the post-issue IPO, where I've annualized the Q1 profit after tax for the company. So it is at around 27. And if I compare it to the peer, then it looks to be very reasonable. So this company is looking very strong. And one more important point which I would like to highlight, that why we are getting such a strong demand and good names in the anchor list, because if the IPO size is big, then definitely it always attract good names, because most of the mutual fund, they never want to put the money in the small size IPO. Some of their compliances always, come in front of them, and that is why. So good mutual funds and strong names from the foreign investors also comes usually in the big size IPO, which is more than 1,000 crore, 2,000 crores, etc. So here the size of IPO is also big, and the kind of theme they are into. And this company has a huge track record because it is a 29-year-old company with a strong management. So putting all these things together, this seems to be a very strong candidate for putting the money into it. And we are recommending to apply this IPO both from the listing gain perspective, because most of the retail investors, they majorly interested into the listing day premium or listing day pop. So it is a good IPO both from the listing day purpose as well as for the long-term purpose. But here I would like to add one more point, that if anyone will be lucky enough to get the allotment, then please put this stock into your portfolio, because it will be giving a very strong return in the long term also, because they have expanded a lot in the last few years, and now it's a time to get the results. And that is why we have seen some sort of volatility in the financials also, because they have done some sort of expansion in the past. So looking after all this, we are recommending subscribe to our clients as well as to your viewers to go for this IPO, both from the listing gain perspective as well as long-term perspective.
I completely understand. It's an opportunity to invest in this company, and if you're lucky, you may get an allocation to Premier Energies. But just important to draw out risk as well, because this is a company that does face intense competition. They also in the past faced challenges of underutilization and historical losses, even though I do know that FY24 was rather positive. Any concerns that one needs to be mindful of? Because beyond listing day, if an investor would like to buy and hold it for the next maybe 1 to 2 years, is this advisable in your opinion from where we stand today?
So, like addressing the concerns which you have highlighted, first of all, I want to say that yes, competition is there, but the industry demand is so strong and the government's focus is so high that even if some competition come, then it will not going to affect the business of the company. So that is the major thing which we believe that will not going to harm in any case, because the kind of demand for the product is really high. So that is one answer to the concerns related to the competition. Secondly, if we talk about the listing day buying, because here for the retail, the number of issues are somewhere around 2 crores, I suppose. I beg your pardon if I might be wrong with the figures, but it is somewhere at around 2 crores. So the number of shares are not that very high. And the subscription amount, I think, will gonna be very high, because the kind of business the company is into, it will definitely going to attract the investors' attention. So my idea here is not to buying on the listing day, because we are already expecting listing to be on a very, very strong note. It might be more than 30-40% premium, which we can see on the listing day itself. So putting the money after 30-40% pop-up is not advisable. So wait for some time to, have a dip in the stock and then make an entry into the counter. This is what we advise for the listing day purpose, because we know that the allotment will going to be very tough. The kind of attraction for this IPO is so high that definitely it will be going to very tough if the allotment we talk about. So if anyone will not get any allotment, then they should not buy on the listing day. Wait for some fall and then make entry into this counter.
So don't get hasty. That's the sum of it all. Premier Energies does have a robust order book. They've also turned positive in recent times. The industry is in the high growth stage with the government initiatives that the company could benefit from. But of course, looking at all factors, risk and opportunities, valuations, Astha does recommend investors to subscribe to this issue with a long-term view, but do not buy it on listing day, because a big gap up is what we are expecting. Well, moving on from there, we'll quickly hear out what the management of Premier Energies also has to say.
Post-COVID, we have seen a great growth story building up in the solar manufacturing sector in India. Not only in India, across the world, post-COVID, everybody started thinking about, a China plus one strategy. India started the Atmanirbhar and Make in India. US has got its Inflation Reduction Act, where they're talking about make in America. So the manufacturing story is now here to stay. It's growing at a fantastic speed, looking at the robust demand. We don't see any challenge from China. The import of cells from China are not a big issue today because Indian solar story is a little different, where Indian government has two kinds of markets. One is where there is a very robust pipeline which the government of India has set up for local manufacturers, and this market is totally protected for local manufacturers to grow the local manufacturing story. And then there is also another market, which is the developer market, where large power plants are being set up, where you can get solar cells from China, and cheaper the cells from China is a big advantage to the developers and to us as manufacturers to make modules for them at most effective cost. And how this helps is that while we are deploying as much solar as we can in India, because it's today the cheapest source of energy, we are also parallelly growing our manufacturing story. And it will not be far that, we will be totally Atmanirbhar. Today, we have got solar module and cell manufacturers in India like us. We do intend to get into wafer manufacturing and ingot manufacturing. In the PLI story which the government of India came up with, there is also polysilicon which is coming up. So I think this is something which is going to really develop very well, keeping in mind the robust demand.
Well, the next one on our radar, Astha, is ECOS Mobility. Now, this is such an interesting company, right? I believe it's a chauffeur-driven car rental service provider in India, based in New Delhi. It's a 600-odd crore IPO, and it does have a pan-India presence across 109 cities. It's an interesting model. They do have a fleet of 12,000 cars, and they do about 8,400 trips at an average every day. But is this a business model you believe in? Is this a company you recommend subscribing to?
Yes, we like the business model. I mean, the revenue is coming from the two parts. First of all, chauffeur-driven car rentals, and secondly, the kind of transportation services which the company is providing. And especially, we have seen of late that most of the big companies, they have now started using such sort of facilities, especially for the transportation related to their employees. So I think this business model is very good. And why we are so much positive? Because what we have seen is the strong financial performance from this company. If you look at the CAGR growth of this company in the top line, more than 100%. In the bottom line, sorry, it is more than 100%. In the top line, it is more than 50%. In the operating profit also, it is more than 100%. And the CAGR growth, which I'm talking right now, I'm taking from FY21 to FY23. So strong CAGR growth as compared to the peers, which they have mentioned in the RHP, the companies coming at a reasonable valuation also. So valuations are reasonable. Financial performance is very strong. Business model is very attractive. So again, this is also one of the candidate of a subscription from our side. So we are recommending subscribe to this IPO as well, both from the listing gain perspective as well as long-term perspective.
So Astha, I do take your point. They seem to be well priced in this space. But what I would also want to understand from you is, while they are seeing significant growth on top line, profitability has been declining. That is one concern I have, and the other one being that this is an OFS, right? Which means that all the funds that are going to be raised are not going to go into the business for expansion. Is that a concern for you, or you don't seem too worried about these two factors I've highlighted?
So regarding OFS, since the company is basically, we can say the company is working on the asset light model. So I think they don't require any funds as such for the expansion, etc. And that is why company, I think there is no need for the company to, raise some funds for utilizing in the company itself. So that can be one of the reason I can say that why they have not bring any sort of fresh issue and only OFS. So yes, I mean, due to the asset light business model, I think there is no need for the company to go for any sort of proceeds. And that is why they have not come out with a fresh IPO. This is one of the reason. And what was the second question? Sorry, I missed your second question.
The fact that their profitability has been declining. So while we've seen growth on the top line, margins, while are very healthy at this stage, there's been a decline in profitability. That's the only concern that springs to my mind in that sense.
So regarding profitability, I can say that it has been shown a strong CAGR growth of more than 100%, because if I compare it from 22 to 24, in 22 FY22, the profit was at about 9 to 10 crores odd level, which has completely risen to 62 crores odd level in 24. So my idea here is that they are on the growth trajectory, and the growth trajectory is very strong, and that is why we are not finding any sort of concerns on the bottom line front. And the company has a high operating leverage, as we can understand. So whatever they will be adding in the top line going ahead also, that will be directly, they will be converting into the bottom line because of the kind of business model the company is into presently.
We'll hear out what the management of ECOS Mobility has to say, and of course then come back to Astha and continue our conversation on a few more IPOs.
Last 25 years, how corporate India has grown. They have set up their offices, and now they have travels to most of the large business cities across the country. And for them, their employees' safety, their employees' comfort, convenience really matters a lot. Keeping that in mind, that is how we also, derived our strategies for growth, and we grew into those cities, providing a consistent level of services across these all major cities where our corporates are present. Having done that, our corporates found great convenience, and in fact, they wanted a company which could understand their requirements and provide them a consistent level of service across all these cities. And that became a big business opportunity for us. So having, systems in place, processes in place, we are able to provide them, standardized service experience across these cities. And based on this, corporates are now moving towards unorganized players to organized players. And that basically, helps them to also deal with fewer vendors or service providers who are able to understand their requirements, meet their standards, and thereby also give them certain buying power, because they are then able to consolidate their transportation spend, which right now was probably being, having to deal with so many different service providers in various different cities. Instead of that, working with pan-India player, it kind of brings them much more convenience and cost advantages as well.